Class is in session, this is the show where knowledge is profit, just so you know. Army Piper, OC Guy, and TradeFly, bringing crypto news to the whole alumni. It's the word on the market, the one-stop shop for the info you need every time that it drops. The go-to show that you need right now. This is Piper Academy, it's all going down, let's go.
Hey, what's up, everybody? Welcome to Piper Academy. I am Army Piper. We got a great show lined up for you today. We got a lot of major economic data coming out this week that you need to know about. We're going to be taking a look at that and looking at this Bitcoin pump that we've had over the weekend since the halving. Is it here to stay, or is there more trouble on the way? We're going to be looking at everything you need to know today. Class is in session. Let's get it. Hey, good morning, everybody. Welcome to Piper Academy. I am Army Piper, and this is the Piper Academy. We bring you guys this show every Monday through Friday, 9:30 a.m. Eastern Standard Time, looking at the news, the charts, and the markets, and everything that you need to have knowledge, because knowledge is profit. Thanks for joining us today, guys. Lot of data to unravel today, so let's not waste any time. Let's go ahead and jump into it. Bring up my co-host, because I don't do the show by myself. I've got an amazing team here. What is up, TradeFly and OC Guy?
What's going on, guys? It's great to be here. It was an awesome weekend, and I'm ready to get this party started. Going to bring you guys some good news and some TA. So let's get it going, man.
Let's do it. OC, how you doing, brother?
I'm doing fantastic. Just had a great night of rest and getting ready to do the crypto wires afterward. So TradeFly, we also see you there. So it seems like the session moved, right? So
yeah, man. So today is going to be the 1v1. I was talking a little smacks, and Blood didn't want the smoke. So we'll see how this goes.
Talking the trash, man. Love it.
Yeah,
that is today. What time is that going to be today, TradeFly?
It's going to be 1 p.m. Eastern. So
1 p.m. Eastern Standard Time, guys. Go check out Trade Wars. It's Crypto Wars, but they have Trade Wars today. And it's going to be a little 1v1 time for TradeFly and Crypto Blood, so that should be pretty good. If you guys are just joining us this morning, welcome to the show. We appreciate everybody in the chat, all the alumni rolling in here after their weekend of watching markets pump. This weekend, great markets movements that going on, but is it here to stay? There's a lot of data, so let's go ahead and unpack what's going on right now currently, and then what we're looking at for economic data coming up over there on the news side. Let's jump into it. Guys, welcome to the news. We got fear and greed back up to 73. And I actually have another breakdown on some fear and greed for you guys for stock market. We're going to be talking about that in just a second here. But yes, currently sitting at 73 right now in greed. If we take a look, guys, look here. The weekly, we're back on green for the weekly. This was red. I said we needed to get this week back to green, and then the monthly back to green. As of right now, monthly is sitting in red. Yes, it is. But a lot of things are giving indication that if we continue this trend, we'll be out of this and back in green before you know it. So looking here at the weekly now, guys, right now, near protocol up 22.8%, SHIB up 16.4%, Floki, Bonk, like a lot of the meme coins really popping off. But let's take a look at the daily and see what we're seeing here. Again, Pepe is there, Near is there, SCI, Pendle, AVAX is up 4.7%, Chainlink, a little movement to the upside for the day. We can just scroll down here and you can see lines of greens on the daily here. There are a couple of things that are down. Bitcoin Cash down 0.1% there. Toncoin down 0.6%. ICP down 0.7%. So not everything is in the green, but for the most part, we did have a lot of green for this weekend. You can see here, Near Protocol jumping up 2 spots in the market cap. That is really nice to see. ICP, though, dropping 2, moving to the downside. We had Stacks moving up by 1. Look here, Render, guys, moved up 3 positions on the total market cap this weekend. And that is really, really bullish. Who else did we have here? Pepe's moved up to position 44. And then a lot of things sliding down, you know, because if something comes up, that means something went down. Let's jump over and check out the liquidations. Liquidations for the past 24 hours. And I was asked in a comment on one of the videos, what are we supposed to glean from this? This is showing you the volatility that is present in the market, guys. guys. When you see a lot of liquidations on both sides, that means that there's definitely some volatility going on where it's pumping up and then dumping and pumping up and dumping, or dumping and pumping, whichever direction it happens to go first. But that is what you're supposed to glean from this. How much volatility is there? If there's not a lot of longs and there's a bunch of shorts, then that means you've got a continuation of trending markets. So there you go. That's how you glean total liquidations and what's the so what for that. So looking here at 24 hours, $107 million in liquidations, 44,524 traders liquidated. Biggest order, ETH. It was on OKX, $4.1 million in liquidations there. You can see for the past 24 hours, looking pretty even on longs versus shorts. They're getting liquidated, guys. So longs at 55.8 million, shorts at 51.6. Let's jump over. This is some big news. This is the big news we talked about, and you guys need to be aware of this because we've got some data coming out this week that could really play havoc depending on how the numbers fall. We're going to look at those consensus and forecasts on that first. Today, nothing really major going on. Tomorrow, we got some S&P global stuff, manufacturing services, PMIs for composite that's coming out, new home sales. So this data will be looked at. It's going to give it like a little micro indication to what we could see with inflation. But Wednesday is when we start getting into the good stuff. And we've got stuff Wednesday, Thursday, and Friday this week. Expect volatility to come off this. First one's going to be Wednesday morning. That is going to be your durable goods there. Right now, it's looking, previously was at 1.3%. Of durable goods orders increase. We're actually looking at a 2.5 on consensus and on forecast. So that 2.5 means that we have an increase of durable goods orders. What durable goods orders is, this is manufacturing. So if there's high orders, this means that they are buying goods so that they can manufacture, sell goods, and that those orders are up. That would indicate that we have manufacturing production to meet demand, and also that people are still buying stuff. So that means healthy economy also could indicate demand from the market, from the buyers, which could lead to higher inflation. So this is a kind of a mix. This is a give or take. I think overall, if we hit 2.5, it should be bullish for the economy. Jumping down though to Thursday, we get GDP growth, and this one's the one that has the most concern for me right now, because you're supposed to grow. What triggers a defined recession, according to economists, not the White House, is GDP growth, right? Quarter over quarter. So we are suspected to have a growth on the quarter over quarter rate of 2.5% for a consensus, 2.3% for a forecast. That would be a growth. However, it is a slower growth than what we saw the previous quarter, which is 3.4. If you really think about it, this quarter that was reported here for previous, that would have been the final quarter of 2023. That was holiday shopping season. So, of course, it's going to be a little bit higher than normal, but hopefully investors and the economists put all of that out in that good, structure. Hey, this was a little bit higher because it was holiday shopping season. We are still on a growth path, and 2.5 is still a growth of the GDP, even though it is not as high as it was. But obviously, that was holiday shopping season again. So, that index, though, for quarter over quarter, for the price index, that's actually coming up. You can see here it's 1.9 and 3% versus 1.7. So we kind of have another mixed week. Given that we have a little bit of bullishness, a little bit of bearishness in all of this data, it's really going to come down to Friday. And Friday, guys, is core PCE. This is the number one thing that the Fed Reserve looks at when they look at inflation and doing rate hikes or rate cuts. And so right now, it is supposed to be 0.3%. That is neutral. That means no change. We are on this path. It has not gone up. It has not gone down. If this comes in neutral, I think we close the week extremely bullish. If this comes in higher, then we are probably going to see a little bit of a shakeout in the markets, and that's all I got to say about that. So let's jump over to the Trio Cam. Let's talk about this inflation data, because nothing here by itself triggers an emotional response, right? at all. But all of it together, when we see, okay, yeah, this is a little bit weighted on bullish, this is a little bit weighted on bearish, and then it all comes down to the how much weight comes off of that PCE at the end of the week. What do you guys think? Do we pump through the week and then we get sell off of this data, or does this market, because they're already feeling so damaged from the stock markets and crypto markets pulling back, that they get scared really easy now? Do they have abused investor syndrome going on here, and they feel very quick to pull back from these markets right now? What do you guys think? OC, we'll go with you first.
Absolutely. I do think that you are accurate on that last part. I do believe that, right now investors are just at the edge of the knife, and not only because of all of this economic data, because we also have the W almost about to blow up, right? That could be the start of a bigger conflict that will have a much worse impact, and some that to the economic data. I'm also a little bit shaky in the markets today, not today, throughout this week. Answering the question, what I think is going to happen, I believe that we're going to keep moving a little bit forward to the upside, and then have a little bit of a pullback to do a double bottom, micro double bottom, maybe daily, weekly double bottom. And then if the W holds back a little bit, we will have an outburst to the upside. That is what I'm looking at it. But again, this is going to be for the micro charts, maybe daily charts or something around that.
Okay. TradeFly, what's your thoughts, bro?
Yeah, man. I think overall sentiment is good for Bitcoin, but for the market itself, when we're talking about traditional stuff like the S&P and the Nasdaq, it looks like it's starting to have a little bit of a reversal, a trend for those in particular, right? We're coming off the all-time high. Now we're starting to see a series of lower highs, lower lows. Really on the short term, though, overall trend is still bullish, but you're starting to see a little bit of reversal. And you're starting to see these things creep up again, where people are starting to talk about a recession, because you're going to see a negative GDP number that's almost guaranteed now at this point. And then if we continue to see negative GDP numbers, or at least GDP numbers that are trending in the wrong direction, that recession talk's going to start up again. And remember, the last time we had a bear market, that's kind of the catalyst of where it all started, was people were looking at the GDP. And then the government magically changed the definition of what a recession was, which was interesting. But
Magic.
here we are.
It's magical.
Yeah, here we are at time now. So, it's, me, I'm very conservative. I don't get too crazy about predicting, are we going to get bullish? Are we going to get bearish? I have my lines that I set up, and I kind of let the market come to me. And then that's what I like to do in terms of swing trading personally. So, I would say sentiment wise, I feel like things are turning a little bearish for the economy, just not so much for Bitcoin. Bitcoin has a lot of positive momentum. Unfortunately, it'll probably have that drag down effect of maybe forcing it into some kind of range or consolidation. That would just kind of be my analysis of that.
Okay. Well, you're not the only one that has those sentiment that there's reasons to be scared. Let's jump over here to the news, and we'll take a look at this. OC will get his camera rolling back here in a second, but right now, looking here, guys, this is the Fear and Greed Index for the stock market. This is for the stock market sentiment according to CNN, and you can take a look here. This blue overlay that we have on here, this is the fear and greed versus the stock market. That red line that's running there, that is the S&P 500. So you can see how low we are right now. It is the lowest level it has been since October 2023, which is back here. But look what happened to price back then. We had this downtrend and then bounced and took off to new all-time highs. Now we've had a pullback and we're that low again. If we actually look at what the Kabisi letter wrote here, he says, stock market sentiment has shifted from greed to nearly extreme fear in 1 week. On Friday, the Fear and Greed Index fell to 31, its lowest reading since October 2023. Meanwhile, the S&P recorded 3 consecutive weeks of losses and is approximately 6% below its all-time highs. At the same time, Volatility Index, if you guys don't know what that is, I call it the stock market insurance. If you put money into the VIX, the buy into the VIX index, then when you think the markets are going to pull back, it does up. It's kind of like stock market insurance. Hey, I'm going to hedge against my stocks that I don't want to sell because I don't want to pay short-term capital gains. So I'm holding these. I'm going to buy a little VIX, and if it's going down, then the VIX is going to make money. That VIX is up 45% during that time period that we've had the 6% drop. So we've gone from a near record number of new all-time highs in Q1 2024 to that very severe volatility that we've had in just a few days. Stock market sentiment is heading to extreme fear, and you can see that right there on that chart, guys. That big blue drop, that is the fear and greed index versus the price. But I think if we have a little bit further to go, you would see that we would hit a nice trend line here, this horizontal that's running across right here. I can't click on this because it's not going to do anything. It's on X. But if we fall a little bit lower here, you can see when we've hit these levels, that typically called those bottoms for reversals. I'm going to be watching closely this week to see if we get that little small pullback on price, which gives it that little small pullback, hits these ranges here that we've had previously before we go back to upside. So thoughts on this, guys? And then I got a couple of more things on X marks the spot, and then we'll get into some TA. But what do you think about that? You know, we talk about fear and greed on Bitcoin, 73. This is fear and greed on the S&P sitting at 31. It's a pretty substantial number in my opinion. TradeFly, what you got on that?
That kind of aligns with almost exactly what I was saying.
Yeah, that's why I brought it up. I was like, good segue. Yeah. Let's go into this.
Yeah, it's fine. Yeah, so I mean, you know how I feel about it. I just talked about it because that's the way I was feeling. You know, it felt a little bearish on that side, and there you go, proof.
Absolutely. OC, you got any thoughts on that, about that fear and greed sitting at 31? Is crypto not in enough fear in comparison to what's going on with the economy?
Absolutely, it's not fear. I mean, we need to acknowledge that, Bitcoin, fear and greed, all right? So Bitcoin, fear and greed, I would say that right now the normal area will be around 70. I don't think that we're going to go back below 70, at least not in a while. Why? Because this same thing happened throughout the bull market. Everybody's a little bit shaky, but we are much more willing to take the risk, which take us further up into a higher prices. Why? Because of the I don't want to say the psychological factor they're having, because it is a real and tangible thing, right? But the psychological part that they're having brings to the people. So, I mean, I've been repeating over and over that I'm going to start shorting the market once the halving event happens. So I'll be willing to enter more shorts than I was previously. Why? Because we are going to be seeing the market makers making that move to the pullback or to draw a little bit back down. And yeah, that will keep everybody at their edge on the fear and greed. But the shock supply will keep driving us up. So yeah, just awesome. I mean, to wrap it up, yep, that's it.
So let's go back. And I wish I had like the magical effect, you know, the little heart playing and all that. Let's go back in the day. We're going to talk about post 9/11, 2001. Do you remember the economic crash that happened globally when we had 9/11 and how long it took for us to get into a flow? We were starting war, Iraq, Afghanistan, both going on at the same time. Time period 2003-ish. Do you remember how bad things were back in the back then on the economy for GDP growth, global sentiment to the markets? Either of you recall that period of time?
Well, Piper, I think you're showing your age right now.
I am, but there's a so what to this.
Yeah.
That was a time of war.
Yes, I was in the middle of that war. I was freedom fighting.
Yes, yeah. I was there too. But there's some relevance to this. Well, there's some relevance to this. I wasn't watching the markets back then either. I was watching my 6 and my Battle Buddy 6. However, comma, pause for effect. Here we go. Kabisi letter remembers those times, and they actually broke it down for us here pretty good on this GDP that we're getting this week. This is why I am bullish on the GDP, guys. Here is going back to 2021 to current, and you can see this red line that this is pretty much the 2% line of growth, right? But let's look and see what he's saying about this GDP that we're getting this week. The U.S. economy is on track for the longest 2% GDP streak in 20 years. If you guys don't know, the GDP is the strength of our economy. Literally, that is how strong is the U.S. economy. On April 25th, the U.S. will publish GDP growth rate for Q1 2024. And as we've already showed you, 2.8% is that expansion level that they're looking at. If we do, in fact, get a 2.8% GDP reading, it would mark the 7th straight quarter of 2% plus expansion. The last time the U.S. economy has seen such a long streak was 2003 and 2004. Is GDP still the best economic indicator? This could be very bullish if we do hit this, because some economists may look at this as the United States is looking very strong right now. And we're not going to get into comments on it yet, because I want to show you the flip side to that. The flip side to that is this right here, guys. Annual changes in how many central banks are holding gold reserves. Looking back the past 4 years, China, India, Turkey led net additions. And you guys can see everything that they've been picking up here. But I want to talk about what he wrote here. He said central banks are stocking up on gold. Can you get back over there for me? Thanks. Central banks are stocking up on gold. Since 2022, China has bought a record 290 gold tons. Last year alone, China acquired more than 225 tons of the metal. China's central bank increased its gold holdings for 17 straight months. In 2022-2023, the world banks bought 1,081 and 1,037 tons of gold, respectively. Prior to 2022, there was never a year in history with 1,000 plus tons of central gold bank purchases. Central bank gold purchases, I should say. Have they lost their faith in their own currencies? And we're seeing that a lot with what's going on with the Dixie, because I talk about the Dixie all the time. The Dixie is not just sentiment of risk on, risk off. We can have the Dixie moving up while we're seeing risk assets still move up. Why is that? Because the basket of other currencies that the US dollar is weighed against is weakening, making the dollar strong by default. It's like I talk about with Bitcoin dominance all the time. Bitcoin don't have to go up in price for its dominance to go up. Bitcoin can stay the same and everything else gets weaker to it, right? So it doesn't necessarily mean valuation increase. I think we're seeing a lot of that with the dollar right now. It's not just about people being risk off in the U.S. economy. I think when they look at the grand scale, the U.S. economy is very strong in comparison to other world economies. And we're seeing that in the amount of gold that other banks are picking up to hedge against their own currency valuations. Now we can have a conversation. TradeFly, will go with you first on this one. What are your thoughts on this? That's a lot of gold. We've never had, as he said, we've never had a year where 1,000 plus tons of gold was bought by central banks, and we've had that a lot in this past year. So thoughts on that?
Bro, you just pretty much served me up a softball, because you know what I'm gonna say. I love gold.
I know you do.
Did
I
get
know
me,
you do,
Dutch
man.
bastard? All right, so yeah, man. I mean, you pretty much hit it. Like, there's not much more for me to expand there, because yeah, when things get shaky, they default to tangible assets. It's a historic trend. It happens over and over again. The economy goes poo-poo, then people start investing in gold and silver, any of those precious metals. Like, that's just the way it works, because if the currency isn't worth anything, that tangible asset will be worth something. And we are, we're hunters and gatherers, but what do we default to? We default to being traders, right? We find assets that we can trade, and that is how we will still be able to acquire the things we need. So if you have gold, you will probably have food. So at least for a little while. Eventually you're gonna run out of everything. But still,
a little bit.
Yeah.
A little bit.
But
Until
regardless,
the guy that invested in bullets comes for your gold.
Yeah. Yeah, that's me. Yeah. That's what I tell my friends. They're like, hey, if it goes down, like, what are you gonna do? I was like, well, I'm gonna wait for all you dummies to gather all your stuff, and then I'm gonna take it from you.
Exactly, man. That's what I'm saying. Oh, see what you got. What you got, brother?
All right, I do need my team full high, so a little bit out of reach on topic here to my right. But what I want to talk about is
Throw
that
that
we've been
tinfoil hat in the
seeing
chat, people.
China. Yeah, please help me out with that. If not, we're gonna be losing signal. All right, guys. So we've been seeing this gold accumulation for a long time. If you do remember, we started talking about China accumulating for 1 year ago. We were talking about this exact same topic almost on December of last year. Also, we were looking at China just dumping the bonds. Remember that when we were talking? Well, they were dumping the what was it, the 10-year bonds, right? And everybody was, hey, what's happening? And then we bring up that they're buying gold and they're buying currencies. They're accumulating their cash of it, right? So there's something we need to talk about, and there's a new restructuration or the new structure of the new economical thing, right? I don't think that it's going to happen like the 0 day that everything is gonna be post-apocalyptic and then we're gonna build from scratch everything. No. It's I believe that it's gonna to be a gradual thing, and we're seeing where countries are believing this might be going, and we can get a hint, and that hint has towards gold standard, right? And something that can be paired to the gold standard. So it's not that they're losing their faith on their currency. They know they can print as much, and if they can print as much, also it can be dumped. So they are hedging their or they're leveraging their own currency against other physical currencies, and of course against the gold standard. It's not only gold. We've been seeing BRICS trading silver, gold, oil, and I don't quite remember which other one was. So yeah, just keep an eye on those metals.
Absolutely. Shout out to Crypto Seth. He said, "What's up, boys?" And then he dropped a $5 super chat. I was getting ready to shout him out anyways, but then he threw in a super chat in here. So shout out to you, man. He said, "Keep up the great work, guys." Hey, bro, you keep up the great work. We appreciate you stopping in. If you guys don't follow Crypto Seth, you guys need to check him out. He's got a great show finding those 100x super gems out there. So he's got a nose for that thing. So shout out to you, man. Another thing that people are investing in right now, and that they should at least be watching, not financial advice. You know what that is? Something I'm really bullish on. Let's jump over here and check this out, guys. This is the hash rate right now for Bitcoin since the halving. The hash rate has astronomically pumped. If you guys don't know, this high hash rate, this is performance levels of miners. Their earnings, I believe, are going to be astronomical in the next quarter. I can't wait to see earnings reports on companies like Marathon Digital and CleanSpark. Why? Because this hash rate. Hash price would have guessed to this extent. This is a parabolic jump, guys. And there's another thing that I want to show you here, because with that hash rate came this right here. This is Bitcoin mining rewards. And you can see here, 840,000. That is when the halving occurred. The 840,000th block started the new 4-year cycle-ish for the halving event. And look at the fees absolutely skyrocket during this period. Now, they've slowed down a little bit since then. But this here is a telltale sign of what's coming to the earnings reports for those mining companies. Feeling very bullish on those miners. Their hash rate is up high. Their fees are kicking high, and sadly, that's the thing. Right now, Ethereum fees, they're not as bad as what Bitcoin fees are. However, pause for effect, guys. This tells me that my mining stocks could be doing very, very well coming up ahead. Of course, it's not just mining stocks that we're going to have those earnings reports on. We do have other companies this week with earnings reports. Let's go down here and take a look at where that is at. It's going to be right here. Taking a look at this. It says from the Kabisi letter, 4 Magnificent 7 companies reporting earnings this week: Microsoft, Google, Meta, and Tesla. NVIDIA is officially down 20% from its peak. Their earnings is coming up here, I think, in about a month, I guess it is, about a month and a half. And then Super Microcomputers is down 50% from its peak. So March PCE data is reported this week, and so we'll see how that plays out with the earnings of these 4 companies. And then lastly, for the stocks, and then then we're going to get into crypto TA, guys. Just in, New York Stock Exchange is considering a proposal for 24/7 trading. In other words, the stock market would never close exactly like the crypto markets are. This bill being put into U.S. regulators, it is a Steve Cohen-backed proposal for a 24/7 exchange of stocks. So big news there for the stock market. That's what I got on the news today for X Marks the Spot. Thoughts on any of that stuff? The hash rate, the fees for Bitcoin right now, or the stock market going 24 hours? Take your pick. Talk about what you want, but let's check out the Bitcoin chart and get into some TA.
Yeah, no, I mean the stock, the 24-hour trading, that is a game changer, man. I mean, there's a lot of people that they will trade stocks during the day and then they switch over to crypto to just kind of continue that trading, on night hours and, throughout the rest of the day. So that's interesting. I'd like to see the effect that has on crypto because I don't know. I don't know if people would default maybe to just staying in stocks because of the conservative nature. So interesting. I think that's actually really big news.
It is big news. It is big. That's why I found that little snippet there on X and put it on X Marks the Spot. I'm going to be keeping a close eye on that and how that works. So, yeah, big
That
news.
genuinely has kept me out of using some other like Robinhood and stuff like that because I was thinking about like those volatility indexes that they have. I'm not putting my thumb up. Stop doing emojis, Mac. But yeah, but it's kept me out because I was like, I don't want to get caught in a trade. I don't want the stock market to be closed and then me not be able to get out of a trade when something happens or news breaks or whatever. So that's actually kept me away from it. That actually kind of opens up the door for me to maybe be a little bit more interested personally.
Yeah, I don't think those people that go to bed on Friday looking at their week going, that was a good week. I can relax all weekend. I don't know how those guys are going to react to a 24-hour market. Like, oh my God, it dumped over the weekend. And I had to watch the charts all weekend. Welcome to crypto. First time,
There you go, man.
OC, you got anything on either the stock market being 24/7 or the hash rate for Bitcoin, those trade fees, the earnings coming up in the quarters ahead for mining stocks? What do you got? What's your feedback on any of these?
Yeah, very quick. It's like having Uber and then taxes trying to catch up, right? I mean, the taxes. Getting to the 24-hour. Oh my God, that's gonna be a big shift, especially on older traders that are heavily invested, and also in Wall Street, right? But I want to touch on also on the hash ribbon. The hash ribbon. You mentioned that we could be having astronomical gains on the miners. I do think now that they have the power to constrain the Bitcoin supply. Why? Because remember that it is not about they're producing it and selling it right away, but producing it and selling it into the next cycle, right? So they usually wait a couple of years, usually even 4 years, to start selling it back up. Why? Because they want to be making it for cheap, right? And selling it for expensive. So that's why they sell just a portion, they keep another one. And I mean, I don't know what's going to happen when they start running out of their, 2022, right? Or 2021. Yep. 2021 Bitcoin, right? I mean, with the ETF and now the stock market is going 24 hours, which is going to also impact on the crypto space. Well, then we might have a very big bottleneck going on there. So we'll see how things go. $5 million Bitcoin, baby.
Let's go. $5 million Bitcoin. Here's a funny thing about that, to put this in perspective, what that hash rate and what those transaction fees mean. This is from an article that I pulled this morning. Bitcoin miners have raked in abnormal transaction fees since the halving. This is from Bernstein Financials. Total miner revenue is currently about triple that of what it was in the pre-halving levels. So they have 3x'd their revenue, their earnings. The spike in network fees indicates the level of developer interest in Bitcoin and the fee revenue potential for miners. The broker expects 15% of miner revenues to be network transaction fees on a sustainable basis. So I just wanted to touch on that. It's going to be astronomical to see what their earnings look like in the months ahead. So very excited, very bullish on my mining right now. But I'm all bullish about it because of Bitcoin. Right now, Bitcoin is doing something here. You guys remember this channel that we'd been talking about here that Bitcoin was in? We pointed this out to you before we ever got this clean touch down here, that this was a key level of support. And by the way, this is a falling channel. It is going down. It's a descending channel. Which way do these normally break? Anybody guess? To the upside. I'll give you a hint. It goes up. Breaks to the upside. We touched that bottom there. Right there, touched the bottom, and then she smacked us back, and then we pumped back up again here. Now we are above the middle of this. This is the 50% line on this channel, guys. And let's go take a look at. Let's just zoom in here and look and see what's happening here on this 50% level. We got above it. We closed a candle there after a rejection off of it, and now we have closed 2 4-hour candles with bodies above this. This is showing support on the 50% level. I am a little concerned right now that we have not broken this peak yet. We got to break this. There's liquidity sitting right here that they're going to be watching for, so we need to keep an eye on that. But right now, sitting about 50% above that 50% line, we are still looking like we're going up here on the Oscillator Pro ribbon. And then we still have a long ways to go, even though we're above that 70% line. We're not seeing any flattening of the candlesticks yet here, a little shortening of it, but not a flattening. So looking decent there. However, if we throw on the power of Chart Prime, by the way, big updates just came out on Chart Prime. You guys should go check it out. They did an update on the Market Oracle Pro and the Market Dynamics Pro. Looking here at this, what we can see is we are right now trying to get above the dynamic reactor. Of course, you guys know this is significant support and significant resistance if we're below it or above it. Right now, we finally got above that dynamic reactor, and it does look like it's trying to get a closure above that. That would give us a more upside movement there on that. And then also on the sitting right there above that also, if you guys take a look here, we do have that upper trade band coming in at about 67,317 after we did a clean retest right there on that median line, that blue delta line of the predictive ranges, giving us this upside move. So that's coming in 67,300 right there on the predictive ranges. And then lastly, we did close out. We did close out the target of this wedge breakout here from Chart Prime's wedges, auto printed wedges there, auto printed chart patterns, I should say. And right now, since we've finished that, it is now coming back up. But the one thing I want to point out, we have no liquidity zones sitting in this area here, according to the algorithmic data that Chart Prime's picking up. We don't have another one, and it's a bearish one. You can see there's more bearish selling pressure here than there is bullish buying pressure at that level, which obviously it's above. Most people are selling up there. And that is sitting at about 60.7% of all of the liquidity, and that's sitting in this liquidity zone being bearish. That is coming in at 70,460. So if we do get from this move here back up to that, you can see that that might be another retest of this breakout line here, and then that would give us into that liquidity zone where that selling pressure is sitting at. Again, if I throw on here, you'll see that right in between these two liquidity zones is the upper resistance line of those predictive ranges also. So there's that data that I wanted to point out and show you. And then one last thing here, if we throw on the fib retracements, I'm not sure what's going on with this verify button here, but okay. If you take a look here at this fib retracements that we have here, we are sitting above that 236 right now. And then if we throw on the liquidity zones, fixed range volume profile, there we go. Sitting right there in that $70,000 range, guys, is the value area high. So a lot of confluence coming in together on this stuff. If you look at what we have there, that point of control literally coming in at the top of that trade band. So first level of resistance that I'm watching, 67,300. Second level of resistance, we're going to be looking right here at about $71,000, guys. That's what I'm seeing on Bitcoin. TradeFly, do you have that liquidity chart or that heat map up? Do you see anything on there that kind of jives with what I was talking about here just now?
Yeah, so I got to pull it up right now. You got a hotspot at about 67,200,
67.3. Yep, that's exactly where I'm seeing that at with that point of control and the upper trade band of predictive ranges. So awesome.
There you go. The other hotspot is down below. So if it were to pull back, you're looking at about 63,850. But yeah, like you said, bias right now seems to be kind of the upside. That's also the closer of the two liquidity hotspots, we'll say. And yeah, I could definitely see it getting up there, clearing out some of that liquidity. And that does kind of jive with what you're looking at on the charts.
Sweet. Let's go ahead and keep it on you. Talk about what you're seeing. We'll do a quick run through. Yep, there you go. And then we'll from there we'll start going into some alts. Guys, let us know in the chat what alts you would like to see, and we will get through as many of them as we can here in the next 20 minutes. So TradeFly, run with it, bro.
Cool. Yeah, I'll keep it pretty quick on Bitcoin. As you can see, I did make the update for Chart Prime, so there's all kinds of new stuff. I think one of the biggest parts here is this prophecy indicator, which tells you market pumps or market dumps. So
and that prophecy
cool.
is pretty freaking awesome. I love that. Can you talk about that and what you're seeing on it?
Yeah, so I mean, it's saying market pumps right now, and I'll be very honest. I just watched the video this morning, so I'm not completely spooled up. OC is probably the subject matter expert, we'll say. So I'll let you guys kind of talk through that part of it. But looking at where we're at right now, I do see an area of resistance, and that's what we got to kind of fight through. And the other thing that I'm going to point out, the only additional thing, and I don't know if you hit it or not, but this was a trend line that me and you, Piper, were both watching. We called this rejection right here, came down, and then we were looking at essentially triple like divergence here on the RSI prime oscillator. All right, so it was moving up. You see these green printed lines here. That's basically saying price is going down, RSI is going up, and then we got a nice reaction off of it. The other thing I was looking at, and we talked about this last week, was this line right here. I said, hey, if we break this, I'd see pretty much a move up to about 65.8, and that kind of jived with what you were seeing. I was trying to kind of predict where the dynamic reactor would be as well as the moving averages. Well, we hit that target area now. So now it's just a matter of breaking through all of this resistance. I don't have a firm like, hey, we're going to keep pushing up through all this, because that's pretty tough. There's a lot. There's moving averages. There's this trend line, and that's really the thing I'm really going to keep probably the closest eye on, because I think if I zoom out a little bit, let me look. Yeah, so you got the 236 there as well, right? So that's probably going to line up. I would probably look for a little bit of a rejection in that area if it does continue to push up. You got your obvious areas here. I mean, 0.5, look how, well this kind of held up. As if it does pull back, there's hope is not lost. That would just set another higher low. So no big deal if it pulls back to about 62K. But right now, again, just keep your eye on this trend line as well as the 0.236 at about, I don't know, I'd say 68, somewhere in that range. And then where we're at right now is an obvious area of resistance because of the moving averages. So super quick, no, nothing too crazy there. And then I'll let you guys kind of explain the old prophecy thing, because I just made the update this morning.
Awesome. Yeah, we'll do so. Right now we're looking at Arbitrum, Injective, Velo, Fetch AI, and Solana there in the YouTube live chat that we have on our Discord. You can take a look there, guys, and pick out what you want to do. Just let me know. Let's kick it over to OC. And OC, you can talk about the prophecy call that's on our new indicator for the Oracle Pro. So it's pretty cool.
Absolutely. So
you okay? Easy.
Sorry, just went away. Yeah.
Shout out to Joe from Trade Intuition also, man. Shout out to you, bro.
Perfect. So I haven't made the update because I'm reserving that for today's class. So we're going to be removing everything and reconfiguring from scratch and talk about the prophecy thing. The prophecy is based on the MP signals, which are max profit signals. The details are basically kept on secret. I don't even know the exact details on the mathematics behind it. But we do know that they are based on what's going to be happening. Just look at or be aware that we can be looking at ranges, all right? Those ranges usually will be affected on the prophecy, and you need to wait for that range to break out, right? So remember that the prophecy will be act on swing pumps or dumps based on the time frame you're in. Is not the exact same moment that, like, for example, if you go in and take a look at this candle, it's not telling you the candle is going to be pumping or dumping. It is a market structure, whether it's going to be pumping or dumping, right? So, but I mean, if we go and look at the MP signals, even in the 4 hour, that's where I like to watch them. let's just give it a second. And bear in mind that this is the old version. The new version just got way better. And where was it? Let's just give it a second. Was it in this one? Or was I on the... All right, now that is reloading, it did not appear. Let's just give it a second. I just changed time frame. Just ready to reload. There we go. Perfect. Look at that. Almost at the top. Almost at the pullback bottom. Almost at the top. Very much at the top at the pullback. So remember, bear in mind that this is the old version. The new version is much refined.
And I dropped that video
fantastic.
too. I dropped that video there in the chat if anyone wants to check it out after the show. But yeah, it's they did a lot of updates on it, and now it'll tell you if you are in bullish or bearish mode. It's like the oracle, like, hey, it's going to pump or it's going to dump. It literally tells you that, so it's pretty cool. What do you got for some TA for us today, OC? What you got?
Perfect. I just wanted to go very quick in Bitcoin. So remember that TradeFly and I was looking at this trend line in here. Mine is on red. TradeFly was on white. It broke out. It took me out in here. I'm back in because I was looking at this area right here. That area is very much paired with what we got with the VPVR, and also let me just zoom in. There we go. And also with this center of the channel, as you have here already. Here, Piper, we're above the center of the channel, so it's not about the breakout, it's about the retest, and off we go to the upside. So far, following that aspect in here, but we need to be very, very careful because based on the previous triangle that everybody had, we are almost retesting at the bottom of that triangle. We need to be very careful there, but I believe that we're going to be making up. Why? Because we still have enough space in the oscillator, all right? Enough space in the oscillator to go reach an overbought area like in here, enough space to start making a bearish divergence. And again, look at our consolidation score, getting ready to break this little range, and our prime score is neutral. So I do believe that a good pullback could be, again, your opportunity to go back in, and then a breakout to the triangle, which will define the direction. I did think that we are bullish, but again, remember what I was saying on the traditional markets, on daily or maybe weekly, I do expect that little pump and then maybe a retracement to make a double bottom and then a movement to the upside. So just be aware of that. We could be having that fake out and scare everybody. That's why I was on daily looking at the previous cycle. So let's just watch when we dump. This is something I was looking at after we had a little bit of a pump. We had the dump, right? Then the retest, and this is what everybody was getting very scared, and then finally make that movement. Depending on this blowout movement, we're gonna be defining the pullbacks, all right, of this next on this. Yeah, let's go into the next one. Sorry about you guys.
Yeah, I'm laughing because of TradeFly's comment on the Discord. TradeFly, I take it that you dropped this thing that has the train going choo choo mother effer. I take it you're getting ready to launch the Soul Train.
You know it. 'Cause I'm gonna get the Soul Train ready.
Oh, right. Good Lord.
Hey, gotta have fun in the background.
No,
right,
no
look
jokes,
at this,
man.
We were talking about the golden pocket here, so that was a nice area to look at for an entry. You see here, you got the divergence, which was signified here by the green lines. You see RSI, prime oscillator going up and right. So that was a pretty nice play. You also had the volume area low here. You can see the point of control was acting as resistance. And finally, it did break through. And this area I had drawn for you as a likely area it can move up to. And sure enough, we are there. Time now. Touching that area at about 155. So that is in conjunction, though, with some moving averages. So you got the 100-day moving average, correction, the 100 SMA on the 4-hour, and then you have the dynamic reactor, right? So you got all of that lining up. So if you did get into this trade down here, this is probably where I would personally look for a rejection or, you know, an area to take profit, maybe the initial aspect of your trade. That's probably the way I would approach that. But look how beautifully, I mean, this is played out. You see the rejection, volume area high, came down, retest, volume area high, and then moved up. And this is just lining up with the area of resistance and you can see that big breakdown. I talk about that all the time. That's very important to me, is seeing that big breakdown off of an area, and that signifies to me that is a significant area of price action. So what does that really mean right now? Well, it's probably going to be a little bit of a rejection, would probably be the bias, right? But if it breaks through, you could actually see a really nice move up and right because it's a significant area. Then we get on the top side of the dynamic reactor. So again, conservative me, I like to get in down here and then exit here and then wait for it to find the next range. That's kind of how I like to play the game. But if you're hanging on, then that's kind of up to you. If you want to take some profit in this area, that's probably what I would also, I'm not going to say advise, but that's kind of the way some people play the game. But yeah, that's what I'm looking for. Honestly, I would expect a little bit of a rejection here, and if it doesn't, get that rejection, then I think it's actually going to move pretty hard up and right. And you did have a trend line here you could keep an eye on, but really it's going to be this area right about here. Let me go ahead and draw a horizontal line for you. So it's going to be a little bit of a range, all right? So just understand, let me make this red because red, you're dead. That's usually bad. All right, 168. All right, that's an area that was previously support. You see the big breakdown. So now it is going to be resistance. And that's probably going to line up with the 200 SMA as well as it works its way up. This is probably going to come down and kind of line up with it a little bit. So 168 would be a key number for you to keep an eye on. And then if we keep pushing up too, I wouldn't be surprised if you kind of get into an overbought situation, just looking at the chart of where this oscillator is right now. So yeah, pretty quick rundown on Sol. Looks all right now, but you're at an area of resistance.
Key resistance. Yep. Absolutely. Yeah. I'm going to jump over. I'm actually seeing very similar right now on Fetch AI. We had a request for this. So let's jump into Fetch, looking at the 4 hour here. One thing that I am seeing here, I'm going to point out several things actually, but the one thing that I am seeing here right now, 382, you can see we had a nice bounce here on the golden pocket. We had a little bit of resistance right here on the 50% fib, and then we broke up through it. And now we're getting multiple rejections here on the 382. That is going to be critical resistance, just like we saw in Solana right there. That was previous support. We broke down below it. Now we're fighting to get back above it. But I think we're actually going to see this happen. And here is why. We did get above the value area low, which means that we would be getting up to the point of control by default. That's typically what happens there. When you break the value area low, you go to the point of control. Just like if you get rejection off of the value area high, you go to the point of control. So we got that there going. There's one. The second thing is, if we turn on a little bit of chart prime here, we broke up and retested for support the dynamic reactor. This is very bullish also. Let's jump into another one here. We are sitting on resistance right now on this delta median. However, what we have here is, and someone actually showed another chart a little bit ago in the Discord group for the members. I'm not sure who it was. I don't remember. My apologies. But one thing that I'm seeing here is we got this peak. We've got this rounding area here. If this was a short peak, that would be a cup and handle. This, guys, is a reverse Adam and Eve. Okay, so if we take this line here, right, oh, nope, not there, sorry, right here, that would be an Adam and Eve. We have a sharp peak and we have a rounded stomach. A lot of times you guys see it where it goes like this, and then that is a bearish Adam and Eve. This is a bullish Adam and Eve. And so looking at this, we should, let's see what the measured move on this would be. Go into the settings because I have it on extend. Let's turn off that extension. There we go. And then let's move that line up to the breakout. That would put us back up here in a range of about $2.79. If we're going to hit there, we might as well go ahead and say that we're going to go to 290. That's going to be on the 236 there. Taking a look at the oscillators that we have here, you can see we're getting near the bottom of the cloud. Right here, it could break down and hit the 0 line, which would be another retest of this value area low here. And that's okay. That would also be the retest of the breakout of this reverse Adam and Eve. But what I'm seeing here right now is we are in a cool-off stage while we're consolidating. When we consolidate like that, you can see the consolidation score is sitting right now at about a 2, but the trend is still staying high. So when we sit here and we go sideways in consolidation while all this stuff cools off, This is a very bullish thing to see. It means that our oscillators are getting that nice easing where they're not so hot while price is not cooling down. It is just sitting in that range. So feeling pretty bullish on Fetch AI. Let's kick it over to OC.
Absolutely. So what I'm looking at here is at Arbitrum. I want to go back and watch what we had predicted before. Why, guys, this is important to see what was being talked about and also the results, so you can start refining your analysis. That's why you usually see me going back when I do have an analysis and give the heads up on what happened, right? So we had a little bit of a range here, and on the range, and I did not move this one because this arrow is not a dumping, because we made the analysis right here at the way down in here. So it was somewhere around 1 month ago. So I was pointing at the consolidation score. All right. So just take that into consideration. So we were expecting, if we bounce from the zero line because we're making a bullish divergence in here with the flip of the ribbon, I will be entering on a late entry on a retest and bounce up, right? What happened? We went all the way down to this area, and I was looking at a trend line. That trend line happened to consolidate a little bit slower, but lower, but you can see that it played out very nicely and gave us the breakout, right? It's not about the breakout, it's about the retest. All right, so now that we have understand what had happened, let's go and take a look at right now what it's looking at. So remember, Bitcoin is leading the way, but still we are with something like either a triangle or an up range, depending on where or how you're looking at this week. I'll be calling like a triangle, so this could be a bearish pennant. Just be a little bit cautious here, because look at our prime score, it is very bearish on the daily, so we're not there yet on the bullish scenario. We are below the zero line, but the only thing that keeps me going, that is not that bad, it is that we are making the cloud a little bit compressed. Look at what happens when the cloud compresses, right? It just blows up to the opposite way. So we are below, we are compressing, so we're searching for that liquidity sweep to then maybe break back into or to the dynamic reactor. Let's just bring up a couple of support and resistance very quick, and we're still perishing here, but you can see that the next big resistance point, it is revealing itself all the way up there. Also on support and resistances, we are on big supports. Daily big support, the strongest number one, and then also we have another one that we were not able to break. So as long, and as you can see, I'm counting that we break once again this area and go visit the previous area, because as Piper mentioned, what gets wicked gets candled, right? In most of the cases. So at this point, we could be having that liquidation sweep, maybe having that little pullback, and then breaking through the zero line. For me, guys, breaking through zero line is gonna be the decision point. Just wrapping it up on the 4 hours, let's also bring up here a channel, and we are breaking the channel with low volume. That low volume, it's indicating me that most likely we are gonna be having a pullback or a retest on the channel. If I prolong this area right here, you'll see that we are forming a double topping here at big resistance. So therefore the retest could be somewhere around 107. So in points of entry, again, at this point, I'm not ready to short the market. I said after the halving, I need to wait for a little bit of a cool down on Bitcoin to start looking for shorts and finding those structures. So at this point, I'll be looking for maybe an entry right here or the next entry somewhere around here. So points of entry for long, 107 and 0.93. This is not financial advice, guys, but those are the big resistance areas for bouncing up. That's what I got, guys. Back to you.
Perfect. So I do have, normally I like to end the show with a nice little hopium piece. I actually have a cloud on the horizon today. Jumping over here, wrapping this out, guys. Mt. Gox back in the news. Trustees updated their Bitcoin and fiat repayment timetable. Now, I want you guys to think about where we are and where we will be on price if things are in the halving cycle. And we're still playing this game, even though economic data says otherwise. October 2024. Mt. Gox trustee updates Bitcoin and fiat repayment table. The creditors can now see the amount of Bitcoin and Bitcoin Cash expected to be repaid this year on the Mt. Gox rehab claim system. And we're just going to move down here and take a look at one little block on here that is important data. It is going to be right there. Mt. Gox is expected to repay its creditors 142,000 Bitcoin and $143,000 of the forked cryptocurrency Bitcoin Cash. If you don't know, it was a hard fork from Bitcoin. In addition to 69 billion Japanese yen worth $510 million, that's going to be released October 2024. So there's a little the little horizon for you there. Lining up with TradeFly's this year will be the peak. Could be. I'm not saying that everyone's going to sell there. We may be so bullish people are afraid to sell at that point. But if it's looking weak, at 142,000 Bitcoin get released at that time period, I can see a lot of people taking profits. Remember, these people were buying this back in, this was founded in 2010. It failed back, like almost 10 years ago. So security breach 2014. So 10 years ago. So these people have been holding this Bitcoin for 10 years. Price could be pretty substantial for them to sell in October 2024. We'll round it out with that. TradeFly thoughts, and then we'll go OC, and then we'll get the final word.
It's wild to me that probably one of the worst experiences of these people's lives financially ends up being one of the best, because they were forced into holding their Bitcoin till now, which is like the peak almost. I mean, in terms of, historically it's the peak. I mean, I'm not saying it's the peak forever, but right now, like they made out on the deal. I mean, it sucks, but it turned into something great. So very, very interesting to look at that. Congratulations for everyone. And hey, 59 people in here still wrapping up the show. Smash those likes, man. We got a pretty nice conversion. I think about 43 likes, so not too bad today. Thank you, everyone. We really appreciate it. And for me, you guys have a great day.
OC, what you got? Thoughts on that October 2024 release of Bitcoin? Then your final words for the people, man.
Oh, yes, I need to have much more tinfoil hats around me. I do believe that was a done deal, but not for the people, but for Mt. Gox, because whatever they got, remember, they need to repay also an amount of US dollars, and they were looking at sell-off. That's very suspicious to me that right now that we're breaking through the all-time highs, or we just break through the all-time highs going into the halving event. Just now, after how long? They're paying whatever amount of Bitcoin in, the equivalent of US dollars on gems. So for me, I believe that was a kind of like a done deal with government and whatever. I'm not going to be talking about that. All right. But you know what I think. Other than that, guys, remember to smash that like button. Thank you so much for joining today. And if you do smash that like button, let's do a deal here, you and I. If you do click on that, just take 1 more minute, but I guarantee you're going to be having a second chance for the halving event. I guarantee you with 100% certainty that we're going to have another halving event.
I don't know that I would say 100% on anything, but I like where your heart's at. I like where your heart's at. Guys, thanks for joining us today. We appreciate you guys being here. Also, if you guys got anything out of today's content, share it with a friend. We put out a lot of great data that most people are not tracking. A lot of people just want to look at charts and look at the crypto like in their project. But at the end of the day, all of that has it's riding on a train called the economy. And that is why we break down so much economic data and news here for you guys on this show, because it is probably the most important thing when it comes to investing, is knowing what's going on in the world of finances and traditional finance, because it's going to trickle down and affect everything. And that's why we put so much work into bringing you guys this data. So share it with a friend and help us grow this channel. We appreciate everyone that came in today to Piper Academy and took a seat here in the classroom. You guys are why we do what we do. We'll be back here tomorrow morning, 9:30 a.m. Eastern Standard Time, bringing you guys the news, the charts, and the markets, and everything you need to have knowledge, because knowledge is profit. Until next time, guys, trade safe. And as always, use a stop loss.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead. we gon' keep on rolling out the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. TradeFly, get the soul train ready. What a line from OCI, former Mexican spaghetti, yo. Crunch crypto with a deep dive to project dime. And if you like the visual powered by Tar Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. Sound off.
To get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean?
That was awesome, dude!